Over the past few years, Britain has witnessed something few could have predicted.
The super wealthy have begun leaving the UK in record numbers.
The UK, once considered a magnet for high net worth individuals, is now experiencing a noticeable outflow of millionaires. In 2023 alone, analysts estimated that over 3,000 millionaires relocated abroad, an increase of more than 50% compared to 2019. But last year alone, more than 77,000 Britons emigrated from the UK, the highest figure in over a decade. Among them were nearly 11,000 millionaires. The United Kingdom, a country once defined by arrival, is now a country of departure. But how did Britain get into all this? Historically, the UK maintained a delicate balance, competitive taxes combined with strong public services. But over the past 15 years, that equilibrium has shifted. The top marginal income tax rate stands at 45%, while the effective tax load on investment gains has risen between 20% and 28%, depending on asset class. For global investors accustomed to tax regimes like the UAE's 0% personal income tax or Singapore's 24% top rate, the contrast has become increasingly stark. Since 2010, the UK has changed major tax rules affecting high earners more than a dozen times. Pension allowances, non-dom rules, dividend taxation, and inheritance rules have all undergone revisions, sometimes announced, reversed, or altered within a span of months. For millionaires whose fortunes depend on long-term planning, this unpredictability functions as a hidden tax of its own. If there is one policy shift repeatedly cited as the breaking point for many wealthy expatriates, it is the restructuring and partial dismantling of the UK's famous non-dom regime. For decades, this system allowed foreign-born residents to avoid paying UK tax on overseas income, provided they paid a remittance charge. At its peak, over 75,000 individuals used this status, contributing billions to the British economy. But reforms starting in 2017, followed by sweeping changes announced in 2024, effectively curtailed many of the programme's advantages. These reforms increased annual charges by 150% for long-term residents and limited the duration one could claim the status. For many entrepreneurs, investors, and global families, this signaled that the UK was shifting away from being a safe, stable base for international capital. Several wealth migration studies estimate that the non-dom changes alone could prompt 2,000 to 3,500 high net worth departures over a multi-year period. London's property market has long been a sanctuary of global wealth. For years, it attracted investment from Russia, the Gulf states, East Asia, and Western Europe. But what was once a welcoming environment has become gradually more restrictive. First, taxes. Stamp duty on prime properties has climbed dramatically, with some foreign buyers now facing combined transaction costs approaching 17% of the property's value. Meanwhile, annual property levies, vacant home taxes, and proposed wealth taxes add additional layers of cost. Second, price stagnation. Prime central London values remain 15 to 20% below their 2014 peak once adjusted for inflation. In contrast, luxury markets in Dubai, Singapore, and even Paris have posted gains of 8 to 20% in the past 2 years. Third, geopolitical scrutiny. Post-2018 transparency rules, including the beneficial ownership registry, made it harder for global investors seeking confidentiality to purchase UK property. Combined, these factors have pushed affluent buyers to look elsewhere, and increasingly, they are choosing to stay elsewhere. Brexit reshaped the UK's economic landscape in ways that continue to reverberate. Before Brexit, the UK served as a strategic gateway to Europe, but with single market access gone, companies now face 4 to 10% tariffs in certain sectors, regulatory duplication, and higher administrative costs. Survey data shows that 1 in 5 high net worth entrepreneurs considered relocating operations following Brexit. On top of these shifts, the UK has experienced slower GDP growth than comparable economies, averaging 1.5% annually over the past decade, compared to 2.1 to 2.5% in the US and many Asian economies. Economic considerations are not the only forces at play. Social factors are increasingly cited in private surveys among departing millionaires. Concerns about crime, social division, and public service strain have risen. London recorded a 20% increase in robberies between 2019 and 2023. Pressure on healthcare, schooling, and infrastructure has led families to question whether they are receiving value for the taxes they pay. Comparatively, wealth-focused cities like Dubai, Singapore, and Zurich score 20 to 30% higher in safety and quality of life indices. Travel accessibility, year-round weather conditions, and high-end education offerings further tip the scales. The modern world offers an expanding menu of countries eager to attract high-net-worth migrants. In the past 5 years, more than 40 nations have introduced golden visas, investor residency programs, or tax incentives tailored to mobile wealth. The UAE has emerged as the standout winner. Dubai's millionaire population has grown by 62% in the last decade, one of the fastest rates in the world. The departure of wealthy individuals is not merely a headline, it carries real economic consequences. Millionaires contribute disproportionately to tax revenue. The top 1% of earners already pay around 30% of all income tax in the UK. When even a few thousand leave, the fiscal impact is meaningful. Analysts estimate that recent outflows could cost the UK between £1.5 and £3 billion in annual tax revenue over time. Moreover, high net worth individuals bring entrepreneurial networks. Studies show they are 3 times more likely to found companies and 5 times more likely to invest in early stage ventures compared to average citizens. Their exit, therefore, drains not only immediate revenue but long-term economic dynamism. Unless counteracted by policy reforms or new incentives, Britain risks a gradual erosion of its status as one of the world's premier destinations for global wealth. The millionaire departure from the UK is not driven by one factor alone. It is the convergence of taxation pressures, policy uncertainty, post-Brexit realities, quality of life concerns, and the rise of powerful global competitors. This moment serves as a crossroads. The decisions policymakers make in the coming years on taxation, immigration, investment, and economic strategy will determine whether the UK reclaims its reputation as a haven for wealth and innovation, or continues to lose its most mobile and influential residents. Until then, Britain can only watch as wealth flows elsewhere.